You? Anybody out there? I don't see you, but I know you're there. So welcome back. I know that everyone is now well fed and ready for the afternoon session, and it is going to be equally engaging conversations. But before we move away from the topic of food altogether, I would really like to invite you to join me for a complimentary breakfast conversation tomorrow at 7:30 a.m. as we talk a little bit about global minimum tax rates, everything you need to know. This session is being facilitated by the industry expert, Mr. Robert Moncrief, Global International Tax and Transaction Services Leader, and Regional Economic Substance Leader, working alongside EY. We will now shift our attention to our session this afternoon, which is led by our regulators. So of course, you would recall from our last engagement on the agenda, we would have spoken with some of our industry leaders. And this morning as well, we spoke on the customer and the focus on ensuring that the customer remains top of mind in order for us to remain viable and relevant. So this afternoon, it is my honor and my distinct pleasure to speak a little bit about the need for a properly regulated banking system, which remains a paramount requirement within our industry. Of course, in recent years, the rate of change within the banking industry has increased significantly. In fact, many have expressed the sentiment that existing regulators may be deemed a step or two behind current industry developments. And today, again, like I said, it is my distinct pleasure to present to you our central banks, 4 of our central banks within the region, to discuss this hot button topic. Governor John Rolle is the governor of the Centrale Bank of Barbados. Chris Louard is the director of Banking Supervision, the Eastern Caribbean Central Bank, and Mrs. Cheryl Greenidge is the director of Banking Supervision, Centrale Bank of Barbados, while Mr. Prakash Mungra is the executive director, Centrale Bank of Aruba. Thank you all so much for joining us this afternoon. Governor Rolle, my pleasure to host you this afternoon. Cheryl, it is a pleasure to see you again. Thank you again for joining us last night and for the And Chris, thank you so much for jumping on. We know the governor should have been here, so we are truly happy that you stepped in to fill in those shoes. Without further ado this afternoon, I would like to invite Governor John Rolle to kick us off to share his experiences. Governor?
Thank you very much, Wendy. And a very pleasant good afternoon to all of the members and affiliates of the Caribbean Association of Bankers. It's certainly a great pleasure to be speaking with people who I hope for the most part are all in the same time zone. We've all been enduring quite a bit in this virtual setting. Our topic this afternoon speaks to regulating transformational banking, and I want to tie this into the Bahamian perspective. I think I have about 15 minutes, so I will try and be as tight as possible. In terms of who are the new players in the space, they're not all in either the Bahamian case, and I suspect not even throughout the region, all entities that are under central bank supervision, but they represent players that are helping to increase the number of intermediaries in the space. And in that respect, I believe that our focus should be in terms of having these players and the transformation that is happening promote development and address an accelerated attention to financial inclusion and financial resilience in our economies. In the Bahamas, we have money transmission businesses, which are very instrumental in the remittance space, and regulations helped in terms of getting them into the space. We have mobile money providers, which are relatively new. We have regulated providers of credit that are overseen by our Securities Commission, and that is really an outgrowth of persons with entities with individual liquidity, where they have sought to try and get a return outside of the banking space. And so it complements the lending that is happening through the banking channel. We're also seeing now an increasing interest in having a framework in place for agency banking. And I know that some countries in our region are well advanced in that area. And it is for reasons that I will explain a bit shortly. In the Bahamian context, when we look at preparing for transformation, financial inclusion and financial access is certainly one of the deliverables that we have to use as a guiding post for where we're headed. We know too that there is a need to respond to some of the overcompensating customer due diligence systems and standards that we introduce in response to some of the AML and CFT trends at the global level. And in some cases, these sort of standards intensified when de-risking started to rear its head in the region. And so we know that the outcome from that was that the financial inclusion side of our outlook weakened. In the Bahamian case, we also had what we call exchange control. I don't know if the caption is similar throughout the region, but it also complicated the relationship onboarding process for persons trying to get services in the banking system. And we've done a lot in recent time to try and break down those barriers so that the immigration considerations don't influence financial inclusion outcomes, particularly when we're talking about making sure that everyone is able to participate in the space. We also have the issue in the Bahamas where, and I see this playing out particularly in the OECS region, where the costly physical infrastructure for banking, providing banking services, is leading to either the shrinkage in terms of the branch network, or in some cases, the outright withdrawal from some markets. In our case, the outright withdrawal from some of the island communities, remote island communities. And we are being confronted more and more with how to deal with hurricane recovery risk. Following Hurricane Dorian in the Bahamas, for example, we've endured, in some cases, almost 2 years before some of the institutions were able to reestablish their physical presence. So that's a resilience issue that is going to be tackled better when we start to look at the digital transformation and how we create the space for digital providers. Now, how has the Bahamas responded? One of the focuses has been under the caption of what we call our payment system modernization initiative, where there's been a focus on trying to get efficiency gains in the payment space. So we would have gone through the establishment of an RTGS and an ACH, the ACH being owned by and operated by the commercial banks. And in the very recent period, we've focused on legal reforms to allow for electronic money services providers, entities that are very instrumental, along with all of the other intermediaries, in our central bank digital currency push. We had to put legislation in place to permit the entrance of the e-money providers into the space. So we wanted to ensure that was done in a regulated fashion. We also placed attention in that transformation to ensuring that the Central Bank Act was amended so that they could participate fully in the payment space. And the interventions, they also made that space more open to credit unions and even the money transmission businesses in terms of being able to participate, because they're also in the mobile money space. Legislation has also had to focus on the consumer protection side when we started to focus on payments, cybersecurity, data protection, etc. And that helped to pave the way not only for the new electronic money services providers, but the way we see the future in terms of some of the guardrails that need to be in place for banking and other service providers under central bank supervision. There was also a lot of attention in the Bahamas in the last 2 to 3 years on simplification of customer due diligence standards and guidelines in the AML CFT space. It has important financial inclusion objectives, and it speaks to how persons at the lower levels of risk can be admitted more easily into the financial services space. A lot of the early returns we will see in that area will be around the mobile wallet services and the payment providers. Where does the central bank digital currency fit into the space? Well, for one thing, it provides a very sharp focus to the transformation that we're trying to achieve in payments around interoperability and being in a position to accelerate the provision of new services through new delivery channels with new players. And interoperability becomes very important when you're bringing those entities into a space and to ensure that you have competition and access on a level playing field basis so that our nationals and residents can choose from among payment providers and still be assured that those platforms interconnect and they will get the basic functionality in terms of their payments experiences. We paid attention to the supporting legal reforms that were necessary for the introduction of a central bank digital currency. And we were very focused on making sure that the technical issues around the sand dollars, we call it, the technical issues around the sand dollar were addressed in central bank digital currency specific regulations. But to give the higher level focus to AML, customer due diligence, and other consumer protection issues, have those continue to be centralized in our payment system regulatory framework, so that when we move forward, we can evolve in those areas without being too narrowly focused on just a CBDC. Our next push in the central bank digital currency space is going to be to heavily focus on national adoptions and focus on how we can get a fully developed ecosystem thriving. One of the issues we know we will have to look at, and regulations could play a role here, because we do have space within our regulation to speak to fee services, is looking at how the entry point for businesses that are participating as merchant can be controlled through the fee structure. And this may be one of the few cases where we start to look directly at fees setting within the payment space. But it is also hinting at, from a financial inclusion point of view, we could very well have to focus more deliberately on fees, on open banking, and also some of the cost structure around the basic access to financial intermediation services from a cost point of view overall. So that is something we do see being important for the Bahamas. And beyond a central bank digital currency, as I would have hinted, we do need to look in the very near term at how we deal with the agency banking framework, which I think is going to be important for substituting for some of the services that banks are providing through the physical channels. But even those sort of relationships, I believe, will have to focus on how the digital channels for services delivery make use of agencies in terms of the relationship setup and the like. Digital inclusion becomes very important in terms of whether you're using mobile devices or you have access to cellular or internet data. And we are going to have to explore very seriously whether regulations are necessary there, how we deal with the protection of minors. That is going to be important for us in terms of the protection, because in all of our spaces, I think today minors are underserved in terms of the attention that they receive relative to past era, because of the direction in which the KYC standards may have evolved. But now, if we are having digital financial services and digital substitutes for cash, we have to face up to the fact that the minors will become more active and visible as direct participants in the space. And that is something that we're all going to have to think about. And as bankers, too, you're going to have to accelerate your thinking around how we get beyond any onboarding hurdles so that individuals can open up accounts just as easily as when many of us were kids in high schools or in junior high school. So that we have to get back to around minors. Interregional payments, I won't say much on this, but this is a very important area where I think there's an opportunity for us as we move into the central bank digital currency space to make some gains. We are certainly going to have to avoid the pitfalls that we encountered when we had the CARICOM multilateral clearing facility. I believe that whatever that arrangement is that we settle upon, hardware probably is not going to be an issue because technology will make it much easier. But we're likely to be, I think, looking at some net settlement process that is with a US dollar component. And certainly the Bahamas will have some vested interest in those kinds of development because if only from a remittance standpoint, there are significant flows that leave the Bahamas for Jamaica, Haiti, and some of the others regions. And there are opportunities, I believe, even in that area for fintech startups and the like, which I think is going to make for quite an interesting time for us in the near to medium term. So Madam Chairperson, thank you very much. And I will pause here for question and answer.
Wonderful, wonderful. Thank you so much, Governor Rolle. I took some copious notes, which we will definitely come back to. Before we open to question and answers, though, I do want to hear from Cheryl what your experience has been like in Barbados. And I would just say that I will call on Prakash next. So Prakash, you're queued, and then Chris, we will call on you last. Thank you, Cheryl.
Okay, thank you, Wendy, and good afternoon. Let me first thank the Caribbean Association of Banks for inviting the Central Bank of Barbados to be part of this panel this afternoon. Now, when I first looked at the topic, I found it quite intriguing from several dimensions. And I started by asking, what does transformation really mean to a supervisor? What does it mean for banks? How do the two perspectives fit or indeed collide? What are the building blocks to transformation? And further, how can there be business as usual when transformation is happening in the face of a pandemic, digitization, fintech, de-risking, blacklisting, gray listing, and the list goes on. So in that context, I consider that to transform means to bring about a dramatic change. And to be transformational requires thinking outside the box. I think we heard a lot of that theme in the previous discussions this morning. Whether it is how we regulate, whether we are reactive or proactive, how agile are we towards changes in the market, in the region, and even globally? How do we implement international standards? And I know AML is a very topical subject matter for many members on the call. And how do we do all of this without doing harm to the sector? Implementing flexibility in the delivery of regulations is also something that we have to weigh, given the dynamics that are currently ongoing in the sector. Now, the pandemic has proven to be a catalyst for change, albeit by necessity rather than by planned effort. This has meant at the central bank delivering on our responsibilities in a different way. A dramatic change has taken place. Hitherto, we would never have thought we could deliver our full range of supervisory responsibilities from, by way of remote work. At the central bank, however, we have for some time created electronic reporting into the organization into a secured data point that facilitates both micro supervision by the regulator and macro supervision by the Financial Stability Unit. So as it presently stands today, there is a 100% submission of both qualitative and quantitative information to facilitate ongoing supervision here at the central bank. And this, as I said before, has allowed us to fully embrace remote work in the execution of both on-site, as we traditionally knew them, and on-site inspections. So on reflection, in some ways here at the bank, a pathway to transformation was being paved. We have, like the Bahamas, attempted to and are in the process of modernizing and innovating our payment system. And we are at a rather advanced stage, I may say, with regards to the legislation, the primary legislation, as well as the regulations that would accompany that act. And that framework will now allow for the licensing and supervision of remittance services, electronic fund transfers, electronic money, and most importantly, I think any other classification that the central bank would consider appropriate. And I think that flexibility allows us to be agile in the face of what may evolve as we go forward beyond the enactment of that new piece of legislation. And in order to progress this exercise, a currency and payments oversight function has been established. And this unit also leads initiatives including the RTGS and the ACH, the latter of which is currently going through a major overhaul. Now, since COVID and in 2018, prior to the onslaught, I would say, of the impact of COVID, in 2018, a regulatory sandbox was created in order to support safe and financial innovation. It provides us with an opportunity to assess innovative activities that, as a result of new technologies and practices, we may hitherto have not seen. We also established a cyber unit to safeguard the organization, which is a store of more and more confidential information and data, because safeguarding the confidence and integrity and the reputation of the central bank is extremely important given the digital age that we are in. The central bank has also established a unit that has the word transformation in it, and I think that says a lot. So we've established a data transformation unit within the governor's office to modernize the governance of data in the bank and to shepherd the bank into the new digital world. As it relates specifically to financial institutions that we have supervised, we have had to consider what changes were needed to regulations to assist banks during the crisis. In this regard, we first issued regulatory guidance on temporary arrangements in 2020 to allow for regulatory relief to licensed financial institutions, and this was recently renewed in June of this year in recognition of the ongoing impact of COVID-19, warranting regulatory relief beyond October 2021, the initial expiry date. And relief measures included breaches to large exposure limits, discussions on moratoria, restrictions that previously applied in our legislation on the number of times loans could be renegotiated. So that sort of relief was afforded to financial institutions in order for them to be able to assist the members of the public during the period of COVID. On the topic of access to the banking system, let me switch just a little bit to non-traditional actors. Some of the considerations before us would be the products that may enter the market by way of newly created firms, whether it be by regulated entities, existing non-financial companies, or non-resident firms remotely. And non-prudential considerations that we are contemplating include how those services are marketed, advisory support, contracts and how those are executed, how complaints are handled, dispute resolution, and the main prudential issues that would accompany that would be financial stability, liquidity, reliance on technology, and cyber security. Digitization, I think, was also alluded to in the earlier sessions, and COVID-19 will likely have a longer term impact or implications for the structure of the financial system. COVID has actually accelerated the move towards digitization and automation in the financial services sector, offering contactless and cost-effective financial services to a wide customer base. Fintechs, as we were hearing this morning, may upstage long-standing providers, or alternately, innovative new services may complement and become ancillary to existing services by our licensees. Now, you may ask, how do we see innovation in financial services impacting regulation and supervision? What are some of the challenges, perhaps? So some teasers I would throw out for the audience. For us, it means looking at talent management and resource building and training, and perhaps subject matter experts to deal with issues such as innovative technologies such as blockchain and artificial intelligence and so on. We also have to understand the range and characteristics of new business models and fintech products and services. We also have to innovate in terms of how we respond from as a regulator. One of the panelists this morning mentioned SupTech and RegTech. Again, how we manage and govern data is something that we look internally as well as apply to our licensees in terms of submitting that information to us. Now, from the perspective of a bank supervisor, we as gatekeepers are key to facilitating innovation and facilitating an environment that retains existing banks and attracts at the same time new investors. In so doing, we must grapple with some of the issues mentioned earlier. I wish to mention in particular the challenge of anti-money laundering and explore the balance that needs to be struck on what seems to be an ongoing basis. Now, in the context of the digital environment, onboarding in a digital environment, for example, has likely called on banks to utilize technology in identifying customers, in verifying identity, and in the issue of document retention. In terms of verification by technology, we issued some guidance early in the COVID pandemic that speaks to video conferencing and whether we do allow for virtual arrangements to witness signatures and so on. So my time is wrapping, so I'm going to skip a couple of my points, and I will just say in delivering the remarks last night at the opening ceremony, Dr. Jules spoke to many relevant themes that I'm sure will permeate this conference. Among these was the comment that he said about resilience is a process and calls for continuous adaptation, creative leadership, innovation, and so on. And I will end by saying to that, I fully agree. So thank you very much. I look forward to questions at the end.
Fantastic, Cheryl. Thank you. Very insightful comments that you've shared with us this afternoon. Before we open again, Prakash, this is your spotlight moment. So the mic is turned over to you.
Topic of regulatory and transformational banking. And I think that in any case, the COVID-19 pandemic has clearly showed the importance, but also the need of a further and more rapid digitalization of the banking industry, also in this region. There's no room for complacency. This also counts for banks operating in this region, with the risk of otherwise becoming obsolete. The business as usual model will need to be thrown overboard. The digitalization efforts need to be stepped up quickly. Continuous innovation should be the post-COVID-19 new normal. As indicated by Charles Darwin, it is not the strongest of species that survive, but the ones that are most adaptable to change. It goes without saying that heavy investments will be needed, not only in hard and software, what have you more, but also in human capital. The skill set needed to face this new digital age is totally different than we are traditionally used to. Banks of the future will evolve in becoming technology firms offering banking services. The way banking is still conducted, for most part, will sooner than later disappear. The new generations definitely will not accept the traditional way banking is still conducted in most parts of this region. Banking services need to be made available in a few clicks. The use of internet and mobile banking, as well as the introduction of new payment methods, are lagging in general in this region. The entrance of new players in the banking industry, also in this region, is just a question of time, if not already happening. Sooner than later, parts of the services and products that are still traditionally offered by banks will move to fintech companies and the so called big tech companies like Apple and Google. Banks will have to adapt their business models and strategies rapidly in order to stay relevant and viable. Fierce competition is ahead, which require firm policy responses. In this regard, at least that is our opinion, it is also inevitable that a further consolidation of the banking industry takes place, not only globally, but also in this region to meet the challenges ahead. Heavy investments, as mentioned, is not only needed in hardware and software, but also in human capital. Also, from the perspective of consumer experience, banks will have to embrace innovation. It is highly recommended, in our opinion, that banks appoint a chief digital officer with the clear mandate to lead the further digitalization of banking services and products and increase the pace of innovation within banks. Also, we as central banks, my colleague speakers have mentioned that also, have to embrace innovation. In this regard, it is noteworthy to mention that the CBA is leading the path in Aruba to further modernization of the payment system. Also, in our capacity of regulator and supervisor, we have to change the way we are regulating and supervising the banking industry. The supervisory capture and toolbox need to be expanded. Furthermore, in this digital age, the application of subtech, big data analysis, artificial intelligence, machine learning need to be explored and introduced as quickly as possible. This will require also on our side, regulatory side, not only heavy investments in technology, but also in human resources. The supervisor 2.0 has to be IT savvy. The role and importance of IT supervision will need to be broadened and strengthened, not only vis-a-vis the supervised institutions, but also within our own organizations. Regulation and supervision should not stifle innovation. However, also from a level playing field and from a perspective of consumer protection, some regulation of these new parties that enter the market will have to be present. Laws, regulations, quick sandboxes, what have you more, will need to be looked into, if not already done so. With regard to the Aruba case, I can tell that our laws are continuously being revised also to take stock of new developments, and that we again try not to stifle innovation with regulation and supervision, but also without, of course, losing track of the international standards and best practices, which are quickly evolving in all areas, not only in the area of AML, CFT, but also in the area of consumer protection and what have you more. The cybersecurity threats have increased substantially over the years and need quick policy responses from all of us. We have to tackle these, not only as regulators, but also as banks, as governments, and so forth. To conclude, change is the only constant for all of us. Thank you for your attention, and I would be very glad to answer any questions you may have.
Thank you so much, Prakash. Spot on. I think a lot of what you spoke about this afternoon would have really tied into some of the thoughts and considerations that we were hearing from the banking sector when we discussed agile banking. But before we wrap up and begin to question, Chris, this is your time. And just to say you're on mute before you get started.
Okay, so thank you, Wendy, for inviting the ECCB to this annual conference. It's always a pleasure for us to come and share with the participants some of the topics and some of the relevant topics that we see happening in our space. This afternoon, I have a brief presentation, so I'm going to share that and then get right into it. So from our perspective in terms of transformational banking, and we are looking at the regulatory trends. So in my remarks, I wish to highlight two areas that we see transforming banking: digitalization and climate change. And what I'm going to do is to emphasize some of the regulatory trends that we see surrounding them. And by digitalization, I mean innovation that translates into productivity and growth. There's some key messages or some key takeaways I want to share with you up front. A growth mindset is required to frame the disruptions in financial services as forces for transformational banking. Innovation clearly is a game changer. We must adopt and wield technologies to secure the region's competitiveness and future. And this period of digitalization is a major trend. It's not going away. So as bankers, we cannot shy away, but we must look for the opportunities. And finally, cooperation and partnerships are essential for our survival. Given the context of digitalization, I want to highlight some of what we are doing within the currency union. So at the ECCB, we have identified payment system modernization as essential for securing the region's competitiveness in the 21st century. And modernization is required to facilitate innovation, which we heard Governor Rolle talk about, support financial inclusion, and to cater for fintechs that we see appearing in our space. Our modernization strategy in the ECCU includes the modernization of our payment system in terms of payment system and services bill to broaden the scope of regulated entities. So currently, only those institutions that are licensed under our Banking Act participate in our payment system. So what we are doing in terms of broadening the scope is to include the non-bank credit institutions, such as the credit unions, the money services, and the like. We are looking at regulations for electronic payment services providers, development of virtual assets business regulatory framework, and the promotion of initiatives towards the reduction of cash usage and to foster financial inclusion. I'm sure you're well aware of our work and our innovative work in terms of our CBDC, in terms of our Dcash pilot. And that's currently ongoing, and we are currently operating in 4 of our member countries with plans to expand into all other member countries as part of our pilot. And we have, over the years as a central bank, a very small central bank that serves 8 member countries, a multi-state central bank. Because of the nature of how we are designed and how we have had to take innovative steps. So we've had to jump in terms of a CBDC very early on, recognized because of some of the geographic challenges that we have, that we serve a membership from Anguilla in the north to Grenada in the south, very dispersed geographically, and we still have to provide the services In terms of our movement of physical currency, we have to fly from St. Kitts to each one of these member countries. So we jumped in terms of Dcash very early on. So this is some of what we are doing in terms of our digital or modernization of our payment system. One of the key issues that I want to point out is one of corporate governance. And I believe Prakash touched on it a bit. But in terms of what we are seeing, it's important. Governance and risk management are essential in all that we are seeing as it relates to digitalization and the transformation that we are seeing in the banking system. The key areas of focus, our banks need to have robust risk management frameworks surrounding all that they are doing in the digital space. Critical is in terms of cybersecurity strategy. The financial industry remains an attractive target for threat actors. I think we know this. And it's imperative that banks prioritize cybersecurity with the appropriate investments in security controls to mitigate risks and to prevent and detect threats. There must be a clear cybersecurity strategy that's based on process, technology, and people. Third, there must be a deliberate digital strategy. A bank's involvement in digital transformation must be deliberate, informed, and intentional. Banks should have a clearly defined digital strategy. It must not happen by osmosis. It must be a choice that we're getting involved in this digital transformation, and we have clearly documented the opportunities, the challenges, the risk. So it must be informed and intentional. I want to say a bit about outsourcing, and I'm sure my other colleague regulators from the region, as regulators, we have seen a significant shift towards outsourcing. We have seen cloud service providers offer a wide range of services. So whether they are supplying storage space, computing power, or providing software and web applications. At the ECCB, we agree and we accept that outsourcing activities to cloud service providers can be an efficient way to benefit from the division of labor. We know that it allows banks to save costs and resources, optimize processes, and gain access to specialist knowledge. However, as a central bank, we are also aware that relying on cloud services brings about new challenge and risk. The security concerns remain, especially as most large cloud service providers are located outside of the Caribbean. There are very few players in the space with AWS, Azure, or IBM. Those are some that we've seen recently being outsourced to. There are concerns about data confidentiality that must be dealt with, and the reputational and third-party risk must be managed. I want to emphasize that whole point about third-party risk, because as banks outsource to these third-party service providers cloud-based solutions, banks must recognize that they are responsible for maintaining the risk management surrounding the activity or the function that has been outsourced. That's key. That third-party risk management is essential and critical. I want to spend a bit of time talking about consumer protection and data privacy. For us, there's a need to balance the innovation and efficiency brought on by digital transformation with the potential challenges for oversight, enforcement, and consumer protection. More and more data is being captured without the effective consent of the consumer. And as a regulator, there are tough choices, or they need to, as a regulator and a bank, a licensee, there are tough choices that need to be made between efficiency and competition versus data privacy and consumer protection. We have seen how data protection rules like the EU General Data Protection Regulation have mandated banks to take important steps in protecting privacy and limiting data use based on consumer consent. And in the ECCB, this is a critical area that we are focusing on, and we're exploring the introduction of regional data protection legislation to ensure there is a common approach across the currency union. My final point, or my penultimate slide, deals with climate change, and I think is a critical point that I spend a few moments on. I think we all can agree that regardless of size, complexity, or business model, our banks in the Caribbean are exposed to climate-related financial risk. Banks should consider the potential impact of climate-related risk drivers on the individual business model and assess the financial materiality of these risks. The impact of climate change could manifest over different time horizons and is likely to build over a longer period of time than the traditional risk drivers that we are used to. The uncertainty around the timing of these risks suggests that a prudent approach is to develop a risk management capacities now. And I emphasize the now because I know there are different conversations and different viewpoints across the Caribbean. And yes, we are low carbon emitters. But the decision that are going to be taken, even at later this weekend, I think at COP26, are going to impact us tremendously, especially as it relates to government policy and the transition risk and some of what we have to do within our space. So we know the physical risk, the hurricanes, so whether they're the acute risk or that we see, or the more long-term risk as droughts and the acute risk of storms and hurricanes and the like. So we are all aware of the physical risk, but I think particularly we need to pay attention to how some of the transition risk and the government policies will impact us in the Caribbean. Our bank should consider material physical risk and transition risk drivers when developing and implementing their business strategies. This includes understanding and assessing how these risks could impact the resilience of a bank's business model over the short, medium, and longer term horizons. Banks should be developing their capabilities and their expertise on climate-related financial risk commensurate with the risk posed to the bank and ensure they have appropriate resources dedicated to managing these risks, and to promote a principle-based approach to improving risk management and supervisory practice related to climate-related financial risk. And that's our stance. Even as a Caribbean regulator, anything that we do in terms of climate-related financial risk has to be principle-based and has to take into view the proportionality and the materiality of our own situation in the Caribbean. In closing, I want to leave with you a few final words. As a central bank, we recognize that these developments cannot be stopped. We encourage and support these developments by taking a broad-based, open approach to the way we think about and tackle digitalization, by raising awareness of the fact that risk can change and shift at any time, and by creating a framework for future developments that does not limit potential opportunities and at the same time appropriately reflects risk. Thank you very much.
Thank you so much. Now that we have heard from all of you regulators, and there were some very similar threads, I'm sure that everyone would have picked up as you went through your various presentations this afternoon. I want to thank you because those were highly engaging. I listened intently. There were some deviations in terms of the thought process, but generally it sounds like we certainly are all on point. I want to open to the audience now for questions, and I think that we have the first one in. We may only have the opportunity to take 2 questions this afternoon, but I know that they will be impactful. So can we get the first question up, please? Thank you. We've talked quite a bit today about the new fintech players in the market. Do you anticipate a change or evolution in the role of the regulator? We've spoken about transformation in banking, but now we're asked whether or not you anticipate or are prepared for an evolution in your roles. Governor Rolle, why don't I start with you?
Well, I think one of the things that we have to strive for most of all is to be, I like to say, progressive. So as regulators, we have a role, particularly to make certain that the regulatory landscape gets out of the way where necessary in terms of allowing fintech innovation to thrive and innovation to thrive, but to make certain that it fits into the standards for AML-CFT, and that it focuses where necessary on the consumer protection and cybersecurity related issues. Because one of the things that we may have been excellent in doing in the past is being able to quickly respond to say what might not be possible. But what might not be possible in our landscape does not necessarily mean that it is not desirable or should not be made possible. So being progressive in terms of understanding and identifying how we could change regulatory structure to deal with the accommodation of fintechs is very important. And then I think from a regulatory point of view, the way we look at the financial system from a safety and soundness point of view should not change. We just need to make certain that we obtain the skills in-house to be able to do the risk management that regulators need to do in this space.
Thank you for that, Governor. And may I ask Prakash to weigh in on this as well? Sorry, Prakash, you're on mute.
Yes, no, I saw it. No, just like I mentioned in my notes during my presentation, that the new supervisor regulator 2.0 has to be very IT savvy. We have to go much more in the area of data science, big data analysis, subtech, what have you more. So I think that the role of the regulator, or let's say the objectives, may stay the same, but the regulator itself has to have a much bigger toolbox, and it has to be much more an IT savvy regulator and supervisor. So I think that these will definitely come into play into the, let's say, the years ahead. If you look at our own Central Bank of Aruba, we have put a lot of emphasis, not only internally, but also externally, on IT supervision. We have issued different policy papers on technology risk management, on outsourcing, on business continuity. I think the remarks made about climate change should also be taken very serious. So there's a lot of things that are not, let's say, in our traditional way of looking at things, but it is definitely so that if we want to keep abreast of the developments and also remain relevant as supervisors and regulators, the only way ahead is to embrace innovation, new ways to, let's say, supervise and regulate the institutions, maybe on an ongoing basis. Why do we accept monthly reports? Why should we not have online data available to monitor, especially the systemic banks, and to make sure that they meet our requirements? So I think that indeed there will be a significant change in the years ahead of what we expect the skill sets to be of the regulator supervisor 2.0, or maybe we should speak of the regulator supervisor 3.0. Thank you.
Wonderful, wonderful. Very interesting that this morning we heard the banks calling for what perhaps will be determined to be the banker 2.0 and now the regulator 2.0. Very interesting, because essentially what that says to me is that we are looking at a fundamental change in industry and everything that we're doing now. I think we'll take one more question, and I can give you the heads up, Cheryl and Chris. This one is going to go out to you, the two C's. So following up on the regulatory landscape, as regulators, what are your views on the pace at which regulatory requirements are being rolled out related to compliance? Cheryl, do you want to take a first go at that one?
Okay, thanks, Wendy. So compliance, and particularly AML CFT, I will interpret the question in that vein, because I know that that is a very topical issue, an important issue for banks. I have actually been part of the national team that coordinates a response to changes in the FATF recommendations and how those are implemented across the system. And the pace at which the standards are changing and the methodology is changing creates a significant degree and pressure on jurisdictions to keep pace and, I dare say, to comply with the international standards. I think one of the challenges in all of this discussion is, as we facilitate innovation in the sector and change in the sector, as was said by one of the earlier panelists, being able to demonstrate that you're complying with international standards becomes very, very important. From the FATF's perspective, beneficial ownership continues to permeate the discussions at both the FATF and the EU, and more recently, the UK. Proliferation financing and how we deal with that in our national risk assessments and play that out in our risk-based instructions to our financial institutions, how we ourselves as supervisors are rolling out our risk-based supervisory frameworks becomes even more important. So as we try to keep pace with the standards as there are guiding us towards stable coins and virtual asset service providers, we are faced with being in a program of assessments by the FATF, as it may in this particular case, and there are several jurisdictions in the region that are either preparing for their fourth round assessments or are actually listed or in enhanced follow-up, as I was, that requires regular reporting back to the CFATF. And then there's some jurisdictions like Barbados that are on FATF lists and on EU lists. So that creates a different dimension as relates to the ability of the jurisdiction to convince those assessors that we have an effective system in place. And I will wrap up by saying that avoiding countermeasures becomes extremely critical to small jurisdictions because it damages our reputation. It turns investors away from us. And the unfortunate thing is that if we are closely tracking what is happening with the standard setters, they are actually rolling out another round of assessments to test us to see how compliant we are with standards gone by and the new ones that are being rolled out. So we have to really strike a balance between how do we cascade those requirements into the sector so that we do not stifle legitimate business, but at the same time observe international standards such that we do not stay or even enter a blacklist or a gray list. Thanks.
Okay, great. Chris, what about you?
Thank you, Wendy. I won't delve or dwell on the AML aspect of it because I think Cheryl has done a very good job highlighting that. What I want to focus on is the merging risk issues, and more so from a regulator, individually national regulators across the Caribbean, and even more so as regional regulators. So Cheryl and Prakash and I sit on what we call the Caribbean Group of Bank Supervisors. And if I were to answer this question from that aspect, and even looking at the ECCB, I would say the pace of which we are putting out standards or regulations that then somewhat governs the practice of some of the emerging risk, we are probably one step behind of what's happening. So for instance, we've put out an outsourcing standard that deals with third-party risk and how you handle outsourcing and third-party risk. But the other emerging issues, we talk about climate change related risk, and we talk about cybersecurity, but we are yet to put out a standard. Those are still in development. And I'm not sure how many, very few of my other regional counterparts have done that. So I think as it relates to emerging risks, to put out those sort of standards and regulations that deal with the emerging risk, I think we probably need to probably quicken our pace so that we give a lot of guidance in terms of how our licensees operate within the space.
Okay, very interesting. Panel this afternoon, I want to say a special thank you for being with us this afternoon. I think that you have certainly shared some insights, which again, in my mind, further solidify the fact that the banks and the regulators are actually working very much in tandem. Perhaps the common concern that there is the slowdown or perhaps a a lack of responsiveness has been addressed, I believe, in more ways than one this afternoon, in indicating that in all of the decisions that we take, we must be measured in ensuring that the monetary system remains a stable one, while still responding to the fact that there are obvious changes that need to happen within the industry. So I want to thank you again for joining us this afternoon. And as we prepare to introduce our next sponsors, I want to give you the opportunity as well to say goodbye to the listening audience. So thank you again and have a wonderful afternoon.
Thank you.
Thank you.
Thank you.
Thank you.